All right, this is like a proper video on market structure. Now, in the previous lesson, we have spoken about market structure and the three ways market moves, how to trade structure. Just the basic things. But we're trying to go more in depth this time. Now, price only move three ways, right? You have price going up, you have price going down, and you have price going sideways. And price doesn't just go up or it doesn't just go like down, and doesn't just go sideways. Like it has a series, how you call it, you can call them stairs, right? It doesn't just go down, right? And it doesn't just go like you can't just, it's not just like a line, you understand? So it has it's a series of what, a series of steps. You can call it like a series of steps. Let me delete this. So you have price going now. The way price reacts is more like a reflection of life, right? You are in a starting point and then you go up. Yeah, it's normal for you to face challenges that might pull you down, but the goal is to what, continue rising regardlessly. You understand? Even despite the pullbacks and challenges, you are breaking through. You understand? So that's just basically how structure works when it comes to in relation to life. Just make sure that your structure is not downtrending, right? Breaking through. And then you have the sideways movement that's no clear direction. Yeah, you have equal number of buyers and sellers at a particular point. So price is just basically just going, sideways. It's just basically going in a range, right? It's not going up or down. It's just going like this. You get? So now these are the way you usually find price moves. Now, to discover a structure, you need what? If you are trying to discover if you're in a bullish structure, you need something like this, right? You need a low to high. You'll probably have been on the chart when a retracement will be forming, or maybe you're even at the chart when everything was forming. So you want to see retrace, you get? It has formed an eye already. You want to see pullback, only for it to what? To break through, right? This is your first sign that you're in an uptrend, and similar for the downtrend. This is your what? This is your first sign that you're in a downtrend, right? So once you see something like this, you now start positioning yourself that okay, you might be in an uptrend. Make sure that when you're looking for a structure of the market, you're aligning with your top-down analysis, right? Now, if you're doing your top-down analysis, and I know you have been saying in sales, you need to start looking for mini structures that support sales, right? That will be a way for you to enter the market. You understand? So now you would actually want to wait for market to onward to now pull back to sort of this area, and then for you to what, to now buy again. And then when it gets to this area, according to the confirmations that I would have on my own list, you see what old resistance become what new support. My Fibonacci will probably be verified, because I won't trade a pullback if it's not verified by Fibonacci. If a certain pullback is not verified by the Fibonacci, I won't trade it, right? It's one of the most important rules in my trading criteria. So I probably must have seen my trading pattern maybe on the 15-minute time frame in this area. You understand? So that's I mean, like, I think that's 3 confirmations. And maybe if I have my trend line, maybe from this place to this place, that they align, So it's basically just trying to pile up confirmations to increase what the confidence I have in a particular trade, right? So like I said, basic structure just moves in more like stairs, right? In an aligned form, like in an angle form. Same thing for the downtrend, nothing crazy, right? And the sideways trend, the consolidation, that one just moves in pretty side directions. Now we are going to talk about how this syncs with inducement. Alright. Now this was something that has affected me over the time and took a while before I could understand it. Now you usually find price, let's say price was going up, you find price doing something like this, comes down, something like this, comes down again, something like this. Usually you expect it to come here, you get, and then what, continue going up. But price doesn't just come here, price comes here, only for it to shoot up. You get, and if you mark your line, you'll find out that maybe you find out that the price has gone below that previous low. You understand? And why? And when it does something like this, people have started thinking that the price is not, because according to what we know about basic structure is that for a good and healthy structure, the retracement is not supposed to even be up to 90% of the impulse move. Now you now find the retracement move going below, right? This changes what? This changes a lot of people's bias, and people are like, maybe the market wants to start selling, and they now think it's what? It's a market structure shift, and they now want to now continue selling. So before I actually continue explaining this, let me quickly explain the market structure shift, right? So it's basically price moving in a particular direction, and then you have what? Price breaking through. You see price has broken through that low. It broke through aggressively. That's what I tell people, that when you're trying to spot for a market structure shift, you want to see momentum in the break of structure. You want to see huge momentum. You don't want to see weak candles breaking. Once you're seeing weak candles, it might probably just be a trap. So and then you find price what coming back to maybe this area, and then to now continue selling. You can see that what the price just changed its entire narrative from bullish structure to a bearish structure. So that's how market shift happen. And most times you now find out that what now actually supports a market shift is actually the chart patterns. You find out that what you have a left shoulder, find that you have a left shoulder, you have what? You have a right shoulder, and you have a head. Okay, you understand? So even if you missed all this move, it will be so easy for you to now what? To now project yourself, and expect. Because whenever you see a tip that you should know is that whenever you see a break of structure happen with a significant what? Head and shoulder, and I'm not talking about small, I'm talking about very significant head and shoulder. All right. Now this is what will happen. Now you find out that what you already have your what? You have your eye. You already have your supposed high to low to what? To lower high to lower low. You understand? And they're all breaking through with massive moves. So usually you will want to what? First thing you want to do is what? Take your Fibonacci, and maybe when you see a point of retracement already, you want to spot to that place. Wait for market to retrace, and market will probably come down to this range, to the neckline, to this sort of this area. Final price market comes down to that area, and most times your trend line will probably fit in the formation. So you mostly just find price you get coming back to this area. Alright, that's why they say what the third touch of the trend line is almost the most powerful. Alright, so whenever I come to the chart and I'm seeing something like this and I find out that price is just going for the third touch, I'm always very, very patient. Like I'm always very, very patient. I'm not calm because I know that the meal I want to eat, like the fish I want to catch, right? So it's very fat fish. Sometimes it doesn't go well, you get bored. Before you enter a trade, you need to see confirmation so you don't take unnecessary losses. And most times, believe me, price will come here, you can probably just consolidate, and it will dump aggressively. That you see all these dumps, it will dump more than it. I'm talking like it could dump, like the third move could dump like times 2. You get, it's always the most aggressive. You get, it doesn't mean that price cannot come back again to retest and dump again. You get, and dump again. You get, it could, you understand? But most times the third move mostly exhausts that particular trend. Right, that's why I like to pay attention on it. So when I see a structure happen and I see that it has a head and shoulder, vice versa for to calculate this as well, vice versa for a bearish market as well. So you have market going massively, and then what, you have a massive break, and then you have price retesting, only towards continue going up. You can see that this was the break of structure at this point. Okay, at that point you find that price created new highs and now retraced. Now there's this sort of trading model that people trade, but don't let me just even explain it to not get you confused. But like I said, most times it's all just in the chart, you understand? So explaining market structure shift, I believe you understand that. So I was now speaking about inducements and how liquidity works. Now what you should know is that if you find a bullish structure like this, right, as long as it's the lows are giving birth to new highs, right? As long as a low gives birth to a new high, that low is a valid low. As long as a high gives birth to a retracement, and the retracement is not up to 90% of the impulse move, that high but is a valid high. And when a high or a low is valid, that means that there's money sitting down in that area. You understand? So if you have I don't like wacky. I'm trying to draw it as perfect as I can because I don't like this thing. So every point you're seeing year to year, yeah. So each of all these high, low. You get they all have orders sitting there. In a sense that what in a bullish structure. Alright. Some people who are not quite confident. Some people they all they trade is what they trade breakthrough. They don't trade retracement, right? When market is breaking through the market, that's what some people trade, right? And they're very good at it, believe me. So what there are holders sitting here. Okay. So there are some people that have sold the market. You understand? To this area. Now the holders sitting here, a lot of liquidity because there's somebody that must have placed the buy stop around this area. You understand? Somebody must have placed what a sell stop that in case market go below this area, you might probably sell. You know, there are orders there. When others are sitting there in a particular place, there's liquidity there, and price is often attracted to liquidity because price is often attracted to what? To money. So I say what? I say you mostly find price sometimes do something like this, take out that previous flow, just a little. Most times it's not obvious, alright? When you see that, it's just that why I say if you want to see a good break of structure breaks with momentum, alright, and the candles, you see those candles are very, very strong candles, but when you're seeing weak candles, it might be a trap. So it breaks it most times just leads to you get only for it to what to continue. Number one, it breaks the rule of what a retracement going to 90% of what, because it even goes above 100% of the impulse move, right? So because what happened there was that there were other seats down here, right? And price needed money. The smart money concept needed money, right? So price is often attracted to areas where others are sitting. If it is obvious, price might touch it, right? So it's not as if the structure has been broken. It was just what inducement, right? So price came out, took liquidity, took out, trapped the sellers because people know that what for a market to continue going up, these lows must be protected, right? These lows must not be broken. That's the rule that keeps it being what a bullish market. This low must not be broken. So people will be like, if market is going to come below that market is probably going to sell. So there'll be tons of people that have placed their sell stop around there. So price will just trigger it instead of price to continue falling and then just continue going up and just definitely takes their stop loss maybe somewhere around there you get. So we're trying to trade, we're trying to learn how to understand these moves and not be a victim of it. Now I'm probably going to be explaining this with if I'm paper drawing it with more of bearish than bullish, but believe me, it's practically just the same thing. Alright. Now something you need to know about market structure shift again that you would know when the market is about to change structure is that what market will have taken liquidity. Now in a bullish scenario, you have your trend, you have your right Y, you have this. I'm just trying to get it as perfect as I can, and it's very confusing sometimes. So you have this, and this. Alright. So you probably have something. This will probably be the end of your bullish structure. So the next candle you expect to be something like this and just go up, right? So but instead you have something like this, a good retracement, only for it to probably come to the same highs, right? That same high, or probably just liquidate it a little bit. So when you see something like this and you see that the market is now falling, yet it does not mean that you should not hop into a sell immediately, right? Because this is the first sign you will see when the market is actually about to break structure. If it's supposed to be a good one, whenever you see that there's no liquidity, right? So I'll get to it, alright? So I'm not, because I don't want to confuse you. So whenever I see price form like this and I see that it's coming down, it most likely will break structure, right? But you don't just want to hop in right away. You want to wait for it to break, because now that we have liquidity taken out, there's a tendency that once price breaks this previous low, it's to reverse. So you can cash it and then you can continue selling. But if price just does something like this, so something like this, right? So and then what it does next was this, you get, and then it just bam. You get most times there was no it's actually formed a new high. That new high failed to form a low. You understand? It failed to form any low that almost formed under high. There was nothing there. It just broke structure immediately. So most of the time price might not retrace. it might not, right? You most likely find price what's coming down to the beginning of that trend line before maybe any sort of retracement. The retracement might not even be valid, so you might just continue dumping, right? So people that trade breakthrough, right? That trade breakout strategy rather. So there are mostly people that help on this. So when you see that liquidity didn't happen, so just a normal upward structure and then break of structure just happen, bam. There's a chance for that it's not reverse and you'll not even be able to catch it. But if you see a continuation entry, that's when you now start to look for continuation patterns, right? Like the engulfing. If you see a chance of maybe a doji and an engulfing candle sitting together, you might want to enter the market and target what in the beginning. So that's something about trends. Whenever it breaks, it always goes to the beginning of it. So that's why I like it that when it comes to trade, you are allowed to maximize your opportunity, right? So when you see something like this happen, I'm going to delete this. So I would usually mark it out like this. That would price was visited this previous high, went below it, and it didn't break through because the break of structure is not just a candle closing above a particular high. It has to close strongly and it has to be accepted. That's why if a break of structure happens, it's not that you just break and reverse. No, it will still go a little bit. You still have it print like 4 to 5 candles before it now retraces. Alright. So we have that liquidity must have been taken around here because this was a valid high that gave birth to a low. And the low was supposed to give it to a high but refused. So there are others sitting down there, and then you mark this area as what as break of structure. Alright. So the best thing you can do is that there will actually be a fair value gap. Fair value gap is when the candle is so long, so there's an imbalance in the market. There'll actually be a fair value gap that would 80% of the time be in the area of the Fibonacci golden zone. That if you use your Fibonacci, that from the previous high to low, that fair value gap will likely be sitting down around that area of the golden zone. Right. So it just piles up your it piles up your piles up your confirmation for a good trade, right? So even if you missed this trade, right, that third move is always very, very eligible for people that have missed this. Most times people have missed this as well. But see that third trade is always like one of the most like fantastic, and what that third trade is most of the time the one that completes the move to the downside, right? So that is basically just what I've been trying to explain the proper market structure, the body structure, the berry structure, sideways structure, how it syncs with inducement, to avoid fake out. So if you think that a break of structure has happened, the first question you want to ask yourself is that let me put it down. So rules for a valid break of structure, right? So the first one that you say to yourself is that the first thing you want to ask is that was it a displacement candle? Displacement basically means that going in a direction with a particular speed. All right, it's not like distance that moving in a particular place. I don't know if you guys still understand physics, but the displacement in this sense means that that candle, the candle that was printed, if it was a bearish candle that was supposed to break structure, was it a very strong one? Like, was it long? Was it, strong candles are very long and weak candles are very, very short. So you want to check that, is it a displacement candle? And that question you want to ask yourself is that was liquidity taken out? Just like I explained, those are type of trends. When you see that liquidity are taken out, this type of the market that you want to stick around to. But if you find out that liquidity has not been taken out, you might just want to just let it play out most times. Because sometimes you might not even see retracement. Sometimes it might be lucky that you see retracement from that type of market structure. So liquidity taken out, right? When you find out that it broke out with strong displacement candle, and before that displacement candle even happened, liquidity was taken out, right? And the last question I want to ask yourself is that was there acceptance in the break of structure direction? Like after market broke that structure with the significant candle, did it move forward? Like did it go higher or did it go lower? You understand? So like I said, after the break of structure, the market needs to come down a little bit before it even reverse. So those are the rules you want to ask yourself. To be sure. And if you're in a trending market, you want to start paying attention. You want to be careful. Whenever price is reversing for you to cash your entries, you want to make sure you are finding your confirmations, right? And when you're setting your stop loss, let's say you are trying to trade a bullish structure. I'm sorry, I'm using more example of bullish structure, and then price is supposed to come around there, you get, and before it comes and reverse, right? So even if you saw your confirmation entry, you're trying to bring your long position, you entered around there, right? So most times your stop loss should be below that previous low. So yeah, sometimes, most times, it's always below that previous low, right? So then you target what times two of it, or maybe the previous high, right? So it just depends. This is a rough example, so it won't be as straight as you see it on the chart, right? So we're probably just going to go to chart examples now. Here is something that's happened recently in the market, and you see that this is a clean form of what a bearish structure. You can see that what price basically moves from here to here to here to here to here to here to here, and for every move it had an internal structure. This is a downward move. There was a bearish structure. This is an upward move. There was what an upward structure, bearish structure. You will see that for every move there's a structure there. There's a mini structure. Structures are made up of structure. That's how you be able to know that for every move there's a structure there, and that's how it makes proper sense to you. So let me see to keep it spot on. You get so this particular move I towards the move this thing towards the trend line 4 times, right? So how am I going to explain here? Now on the higher time frame, most of the time it's always clear structure. Like I don't know, sure, but I hardly find liquidity being taken out on the higher time frame, or like on the mini time frame where you find it's just taken out, you get, and stuff like that. It's always clear. Liquidity always happen. Let me not even like say it as a certain way, but now the way I trade this market is that I trade this market at this point. I also trade this market at this point. So I had already set, let's say, looking from this previous end, set my Fibonacci from swing high to swing low. And you see that price came to the 50%. My trend line was verified. I went to the lower time frame and I found entries. Right. So I'm going to try to find something that relates to what I've explained to see if it syncs well with you. Hold on, show me for that. Bunch of structures here, man. Aha! Now look at this. You have your high to low, to lower high, to lower low, to lower high, to lower low, to lower high, and lower high didn't give birth to what? To a lower low. Price what? Just on the top, and what dropped heavily. So when I saw this forming, alright, I knew that something was wrong. So when I saw that the market was reversing back to this area, I knew that something was wrong. Number one, the original structure of the market was what? Was bearish, right? So, and this inside this mini bullish candle, like you can say this inside this mini bullish retracement candle, is a bullish what? It's a bullish candle. It's a bullish how do you call it? It's a bullish structure there. Retracing back towards the trend line. The structure had already been broken there, right? Because this was the what? Sorry, this was the last low that gave it to high. That gave it to this, and this decided to what? Couldn't give it to a new high. So the break of structure had already even happened here, and you can see the candle that happened. You can see that the break of structure happened with a huge displacement. You can see how this candle fired down, and it fired down deeply. Alright, that's how you know a valid break. So everything had already synced. Alright, so I did not even expect this area. That even if market was going to come back like this, I didn't expect it to now go to break structure just like that. Yeah. So I said, okay, what was happening? Okay, and I found out that market came to this top, and you can see that as market was approaching this top, you can see that as it was approaching with what? With strong candles. When it started rising up, you can see the body of this candle is strong. This one is strong, but then it started creating wicks, started creating tons and tons of wicks. Because you can see that as it got close to the top, the candles that were appearing were now weaker candles. That's when I knew that something was happening. And again, at this point, FOMC was about to be released, and I knew that okay, I think it's going to be a huge drop, right? And you can see that massive market just tanked massively. That was massively. Now this is another example where you have what? You have your high, to your low, to lower high, to lower low, why? And no, I'm not gonna count that because it's actually just weak. Hold on, I'm just trying to like check it to see if I'm on the right track. Okay. Okay, yeah, I was right actually. So I have what? I have my high to my low, to lower high, to lower low, lower high to what? Lower low. And you can see how price did what? You can see that price after that price didn't form any lower high. It just what? It just broke all through. You get gave chance because one smaller time frame gave chance for consolidation. You get to gather on that momentum for people that want to enter. And then what did it do next? You can see that what it rose all to the top before it now turned eventually. What I'm trying to say is that what retracement did not happen, right? You can see that if you put your Fibonacci from this swing low to this single, you find out that the price didn't even come out to the 50%, so still in the premium zone, right? And usually you won't take all this type of trades, right? And the value retracement app is only retracement is only valid when it comes out to the 50% or even more, right? So there was no value retracement. That's why I said whenever a break of structure happens, alright, and there was no liquidity taken out before then, the chance of it reversing is very low. So when you see that it's already consolidating like this, it will be a chance for you to now pay attention to the market, because if you drew your trend line, you find out that this is actually what a triangle pennant, right? Triangle pennant is a continuation chart pattern. It's something that shows that what price are moving in a particular direction and it's now resting to still continue in that direction, right? So during that resting phase is something you want to catch. You can see that every time it moves up, it moves what and go candle. So when it got to this top, that was the main, like I said, on the 4 hour you would have your actual direction of the market. On the 1 hour you try to find structures and 15 minutes entries. So it was already moving to this line. That's there that this trend resistance is very very strong, right? So and price might actually respect it. So I think that is actually basically everything I have. So I do plan to go in depth to find tons and tons of examples, but I'm not trying to make this video lengthy. It's just a basic understanding of structure alongside with inducement, right? I do not trade inducement, but whenever a break of structure is about to happen and liquidities are taken out first, it gives me joy, especially when I see it happen. All right, so those type of trades I do not hop in immediately. So it's basically just like this in a bullish sense. I have my market going up like this, right? So I have something like this and something like this. So and I see market come down, it always makes me happy. But I don't jump in, right? I always wait for a break. It always makes me happy because those type of trades are always very very good. To me, they are my plus sectors, because when price eventually reverses, you find your confirmation entry and then what you drop, you get these are trades that you can hold long enough, right, to the beginning of the trend line. So the price could get somewhere else, around there, only for it to reverse and then what and that chance for you to now enter the market again, and then you just continue selling, right? So structure is actually a simple way to actually make money, and it's not complicated at all, I promise you. So I think that's pretty much what I have about a proper in-depth on market structure and how I feel it should be treated. Now I used to say something, I used to say something that what I say today I could disagree tomorrow. So we are learning forever, and I could come back and make corrections eventually. But right now, whatever it is I've put down here is what is helping me currently. And if I learn further again and I feel like I need to make another video, I definitely will. So I think that brings me to the end of this market structure video.